and welcome to today's edition of the Daily Market Commentary. Hope everybody's had an absolutely amazing trading day. For those of you new to the channel, welcome. We do the same thing each and every day, looking at the same 10 to 12 futures markets, identifying possible breakouts and turning points. But the key is we leave the lines on the charts to hold us accountable. And yesterday's one of those days where I'm going to be held accountable. Let's go ahead and dive right in. I want to show you some interesting trades. So starting with the S&P, now yesterday I had added a little tiny 15-minute level here because I thought there was a chance we'd get a bit of a reversal right in here. But one of the things I talked about on the video yesterday was, I'm just not in love with the way that we're arriving into here, right? When you've got that weak arrival, it can really dampen the mood, if you will. And we got a very weak arrival into this area. And so in doing so, we kind of touched in here, base, before then we broke right up through it. Now, the good thing is this is a really small level, right? I mean, you're looking at 2 or 3 points. And that's really why we do those 15-minute levels, is to reduce our overall level of risk. And I'm willing to take those because when you get a 10 or 20-point winner, you take a 2-point loser, you'll be okay. And that's really the idea, behind that. Looking at the NQ, now, the difference in the NQ trade is you should never have gotten filled. And the reason you should never have gotten filled is because this is a dashed line. Price came up and it went right through the level. And by going right through the level, you should not get filled on that style of a trade. So I'm going to remove these lines. So both of those levels, they both went through that areas of where I thought there would be some resistance. So all in all, what does that do for where we are today? Well, our momentum is definitely waning. We can see that. Our upward momentum is waning, but it doesn't mean that our reversal has occurred. We're still waiting on, I need a reason. I need a compelling reason to get long or a compelling reason to get short. And right now, looking at this on the 4-hour chart, we've had, you can see the rollover effect here. Now, this is overnight trading through these 3 candlesticks, so it's not a whole lot of momentum there. And we are coming up to this area here of prior basing that we need to be aware of, but it's coming in very weakly into this area. So what I'm going to do is I'm going to remember one of my favorite sayings. Sometimes discretion is the better part of valor, and I'm going to stay away. There's really just not enough for me to there's not a reason for me to jump in there yet. Now, in the NQ, we are kind of starting this sideways base, and maybe could even, if we get a little bit of a pullback into this region here, it could give you a decent opportunity. So both of those are actually still pretty good opportunities, pretty good levels, since this one just blew right through. But the good news is on this one blowing right through is we were expecting that confirmation. We didn't get that confirmation. Now, I also wouldn't be to object to somebody saying, I'm going to take a long on a breakout above here, but look what we have sitting above that breakout area. Well, we've got this area here, which is another potential reversal point. So we don't really have what's called room to roam. So once again, on this one, I'm going to do the same thing. I'm going to let this settle in, give me a reason to make a decision. Crude oil. So crude oil and the Canadian dollar, I want to show these two together. And crude oil, I got this breakdown below here, which is where I said, okay, when we break down below here, there could be a shorting opportunity. Now, I want to show the relationship of crude oil and the Canadian dollar because we broke out to the downside and popped right back up. It just gave us a tiny little breakout. And then on the Canadian dollar, we broke out to the upside. And then it didn't hold. Now both of those trades gave me decent breakout potential, but crude oil broke out to the downside and then rallied up. Canadian dollar broke out to the upside and then went down. Well, and this is due to the inverse relationship of these two pairs. I actually like to see, though it stinks to get one of those shakeout, fake out breakouts, which is what happened through here. I like to see this relationship because what this does is this helps to confirm that it becomes a higher probability usage to use crude oil when trading the Canadian dollar and vice versa. So both of those gave me one of those breakouts that, unfortunately were a little bit on the shakeout, fake out, breakout side, which I'm okay with that when it's a fairly small loss on both of those. What I want to be able to do though is look for where's the next reversal that's going to come, and I don't have that in crude oil. In gold, we are putting in a decent base here, so just keep an eye on the Twitter feed today. If we get a decent move one way or the other, I may be updating. This is really setting up for the kind of trade that I like to do on some sort of a breakout. It's just not quite there yet. So keep an eye on the Twitter feed today, and we'll talk about that as it comes to fruition. So not a whole lot to add, and I don't want to force a trade just because the market because I feel like I have to. The Aussie. So we talked yesterday in the Aussie about this possibly being a breakdown on a rising head and shoulders, and that's kind of what I didn't do that to talk so much about the head and shoulders pattern as I did to talk about the measured move of a head and shoulders pattern. And the measured move of a head and shoulders pattern is from the neckline to the top of the head. Well, that's the measured move. So if I take this, the idea is that once it breaks down, it's supposed to make that movement. Well, look where that puts us. Right into this area here, which is a better buying opportunity. So if you're so inclined, you can short this breakdown. I will tell you, I did not. And the reason I didn't short this breakdown is because this breakdown doesn't follow my rules. I didn't really have my room to roam on this breakdown because of these two little areas in here. So I'm holding off on shorting the breakdown. It's a potential, however, to get short on a rally back up to a smaller time period. So if we rally back up, maybe to this area right in through here, then you may get a little reversal in here. You could even go all the way down as low as a 5-minute chart and reverse right in through here if you want to be a day trader. I like to stick to the bigger picture time periods. I find that my probabilities are better on the bigger picture time periods, so I may wait for a decent reversal to set itself up. Looking at the bonds, we are still in between our areas in the bond markets. It's not quite reached our level and our tradable area of opportunity. The euro, very much the same thing, as it's got an area above us that we're not there yet. And there's our Canadian dollar. We were waiting on the breakout, and we got the false breakout. So those were the two that were in there. And those of you that watch us regularly know that we do talk about breakouts, but a breakout is something I've got to be willing, if I get a false breakout, to walk away, and to walk away quickly. Got to be willing to walk away quickly. Japanese yen, a nice little piece here as we broke down below our rising trend line, talked about a potential breakdown below this line, and that's exactly what we've gotten through here. So this breakdown is occurring. So some of you hopefully were able to catch that breakdown on the Japanese yen. However, on the Great British Pound, we came smoking right through this level, right here on the open, right here on the London market opens straight down, hammered right through this area here. May get a decent reversal, but nothing. As I anticipated us to get some sort of a bounce off of here. This is the kind of arrival that we want to see. We just happen to go through the area. It may wind up still bouncing because of this pivot area down here. So at this point, on this one, you could go candle to candle style of trading, or you could just not fight it, and that's okay too. So looking at what we have for today, one of the things that I would definitely say is be prudent to your positions. See that our momentum is weakening on our S&P markets. Gold is setting up for a potential basing breakout. What I would say, number one, is don't force the shot. If you get in the game and you don't have an open shot, don't just try to force it. Wait for that shot to come to you. And I kind of feel like sometimes if we're trading every single day, we feel like we have to trade today. The answer to that is no, you don't. You got to wait for the right setup, and that's what's going to be a better opportunity. So until tomorrow, everybody, if you've got questions, please feel free to send me an email, chuck@iifinancial.com.